following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. The problem with making assumptions is that we believe they are the truth. We make an assumption, we misunderstand, we take it personally, then we react by sending emotional poison with our word. This creates a whole big drama for nothing. Market-wise, let's take a look at it out here. We have the Dow Industrials up 6, Nasdaq's down 1, S&P's are flat, gold contract down $5, trading at $1,351 an ounce. Silver down 13 cents at $19.74 an ounce. Platinum flat at $11.17 an ounce. We got copper down a penny at $2.16 a pound. Light sweet crude up 22 cents, $46.80 a barrel. Bonds, 10-year note up 5 ticks, 132.05. 30-year bond up 20 ticks, 171.23. King dollar down 34 ticks at 94.73. The euro's trading at $1.12, and the yen is at 100. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Bottom line out here today, the Fed minutes out here, put some volatility into the market. Market was down 11 S&P points, popped back into the green. What I expect you're going to see is this market's going to sell off into the close, and we're going to have an expansion of volume. SPYs right now, you're at 54 million on the SPYs. You're flat. Bottom line, it's going to need a lot more than this to go downtown, but this is starting to get there. We did 49 million at the highs. This will end up doing about 70 million today on the way down. NDX 100, the 3Qs, the NASDAQ composite is what's leading this baby down. It's subtle, but that's what's leading it down. So the 3Qs out here have done 13 million shares thus far. That's after hitting the high. On Monday, we did 11 million, 11.7. We're at 13.3. We'll do about 15, 16 million. And I expect we're going to be flat to slightly lower. Nothing heavy, just subtle enough. It's subtle enough, folks, that it wants lower price. Gold contract. What do we have with the gold contract? We had price spread out here. We had reached a high of 13.56, a low of 13.40. You're down $4.70 for the day, which is not a big deal, but guess what? Can't catch a bid. That's the real bottom line. Cannot catch a bid. Bonds. What do we have inside the bond market? Notes, flat. If we go take a look at the 10-year note right now, what we have at the 10-year note trading at 132.05, and the longer this stays right next to this potential B point of an ABC structure on the way down, bigger problem. And, you know, we hit 131.26 today. The B point on this is 131.19. Both yesterday and today we're going to have volume. So you're pushing a swing low and you are pushing it with volume, which is really unusual inside the bond market, folks. I forget when the last time I saw an ABC structure on the way down in bonds. 30-year, same type of setup. The 30-year, we hit a low today of 170.28. Remember, there's 32 ticks and 1 point in the bond market. The low that it looks like it's going after is 169.31. So we'll see where that shakes out. King dollar. What do we have? A king dollar. King dollar numbers came out. King dollar gets into the lows of yesterday. Has lighter volume. Kind of sideways move. King dollar really hasn't shown a lot out here. What I do expect you're going to see is that right at this particular point, King dollar is building cause, and the cause that it's building is for higher price. That's where this is shaking out. Fed minutes. Fed minutes come out, folks. What they said inside the Fed minutes, it was actually a split deal. So status quo split deal. They have been out yapping that they want to raise rates, but guess what? I suspect it's going to be just a keep yapping deal about wanting to raise rates. And, at some point, what the market's looking at right now is at some point it is going to happen another 0.25%. That's kind of, it looks at where the market's trading at, worrying about all of the above, okay? No, it will never end. It never does end. That's what bureaucracies love to do. So we get the 10-year right now trading at 1.5. Bottom line is that what I do expect you're going to see, though, is that, guess what? They are going to go up a 0.25 point. That's how this, the more that it comes out there and one wraps, another wraps, another wraps, we'll see whether it's in December, whether it's next year. But the way the market is trading right now, it also looks like, guess what? They're going to go. If they're not going to go, what we don't know is that when the market starts selling off like this, like in the NASDAQ today, the NASDAQ is going to have some big volume. I mean, big volume. Yesterday, we had the acceleration in the NASDAQ. NASDAQ came in at 1.6 billion. Today, you're going to probably see about 1.8 billion. And this is when it's subtle, yet you're down. And what ends up happening is that it's just a matter of when you really get down with some real points. We're still down 8 points. That's nothing. But we had the expansion of volume. So let's see. Well, Wednesday in the summer, yeah, it still has tomorrow to get into lower price. The XAU and the HUI, both cases coming down, big volume. A couple of these, we'll find out whether these have done ABC structures on the way down. At 8 o'clock tonight. It looks to me that that they're into a beat. Like the XAU is down $2.20 at $108.64. It's going after $108.30, which we broke. We had a low of $106.60, and it looks to me from looking at the individual equities that we will have the volume, meaning there's an expansion of volume, and of course that's problematic. It's not big problematic, but bottom line is that that is saying that you're going to go to lower prices. If we go over to Rheingold Resources, which is of course always one of the strongest equities out here, Rheingold's off its high of $126. You're trading 109, and this is busting another swing point today with volume. So Rheingold's, I can make the case it's an ABC structure on the way down to approximately the $101 level, and you're at 109 right now. We go take a look at the, where is Gold Bugs Index. We're at the XAU, now go to the Gold Bugs. Gold Bugs trading down 648. We're at 268. And what that also does, that brings it inside a lower price point, lower trading range, all of the above. So bottom line, I think if you keep your eye on these metals, folks, between the NASDAQ and the metals, that's what, to me, really have been given the best signals. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 3. Nasdaq's down 9. S&Ps are down 1. Let's take a look at some of the higher volume stocks in this market. You have Bank of America off 4 cents. We have, let's see, Staples is down 65. You have Target Corporation off $4.60. They're getting toasted. Let's go take a look at Target and see what they're doing out here. So they come out with numbers this morning. Same store sales were down. That's a problem, of course. They gap lower. Oh, look at this. This is about as clean as you can get. So Target, folks, last 6 months, the high of the last 6 months was $84.14. It crashes in May, June, July, August. Yeah, so that was the last numbers. It goes all the way down to 65. So you figure in a month it goes from 84 to 65. And what it had done, and 65 is a high volume low. It crawled all the way back up to 77, gaps away again. And what you have here is that this high volume low in Target at that $65 level is going to get hit. Let's pull this in a weekly. Yeah, bottom line. This is a classic. You talk about coming right up to ice, gives it up in spades, and now it's make its way back down to the $65 area. LOW. Let's go take a Lowe's. Home Depot made it. Made the numbers, did good. Lowe's is just not happening. So Lowe's gaps down $4.50 today. We're trading right now at $76.90. Put this. Okay, so this is going to be interesting to see. This is a problem. This is a little problem child. So what you have here is this. Lowe's had broken out. It broke out the week of May 20th. Gets over the consolidation that had started in February of 2015 and does it with good volume. And guess what? You are coming back into that area and you're flying with volume. We've done 27 million shares. And let's see, so it's only Wednesday. Yeah, so this, okay, on a weekly, it's on 27 million. It'd have to do over 41 million, but we're doing 16 million today. So this has the amount of momentum to get back inside $76.25. And if you do, then you're going to go right after this swing low from February 12th. Let me see this on a monthly for a second. Yeah, so on a monthly, you know, stock went one way. You know, this was a one-way ride, no doubt. Meaning from $18 to $80. Let's go over to Home Depot and let's take a look at Home Depot HD and see what that looks like. HD. So Home Depot, yeah, different stock. It's interesting. So, and this is what the differences in the stores are. So check this out, folks. This is pretty cool. So Home Depot is set up. They're both set up for contractors, but Home Depot gets more contracting business than Lowe's does, meaning just, and so what ends up happening is this, is that during, when you didn't have building going on, meaning, let's say the last 3 years you had a lot of building going on, still going on. Prior to that, let's say from 2007 going up to 2013, what you would have is that both of those stores were kind of moving together, and that would be like the retail business because there wasn't as much building, there wasn't as much contracting. Now what you have, because the contracting is kicking in, guess what? Home Depot is doing better than Lowe's. That's how that's kind of shaken out. And in the context of even Home Depot, which is pretty cool, that really isn't the source either of contracting. If you're doing bigger contracting, you're going to go to a couple different firms. But I suspect that is what's in those numbers out there, and that's what's probably pulling those numbers right now. SPLS, old Staples is trying to stay alive, and it's having a tough time staying alive. Staples is down 67 cents today. That also counter-trend bounce it was doing since May. It gapped lower in May, did a counter-trend bounce, and that's going right after the lows again. So Staples wants to get into that $8.21. And if Staples breaks that $8.21, then get out of the way. I suspect that just the rents that Staples and Office Depot are paying, they're not going to be around for a long period of time. The stores are too big. If you have gone into the stores, you'll see that they're nothing like they used to be before. I think some of them even starting to sell toys like Radio Shack used to sell. We go take a look at Walmart. Walmart tomorrow. So Target came out today. I believe Walmart's tomorrow morning. Let me see this. 18th. Yeah, today's the 17th, right? Yeah, so Walmart's going to come out with numbers tomorrow. Now, Walmart's trading $72.68. And this also has a high volume swing low. So this is going to be wild watching how Walmart trades out, because Walmart has Walmart's right up to ice with light volume. You're at 72. The high volume bar is laying out here at 67 to 57. You push up, and we've pushed up every month from. You had some decent volume May. May had 232 million. But then June, you go higher at 185. You go higher last month with 137. And this month thus far, we've done 96. So that's an indication that Walmart also is going to give it up. And we'll see what Walmart has to say tomorrow morning, number-wise, meaning do they give it up, they do better. The oil market, let's go to oil. So oil is having a really tough time getting through ice, folks. Oil got to a high today of $46.95, and ice is laying out here at $46.94 to $47.22. We did 527,000 contracts out here today, and that market, no doubt, was you had some good volatility in that market today. The numbers come out, the API numbers, and those numbers were good for the oil market, meaning for the bulls. What you had is that you had a drawdown versus, they were expecting a little surplus, and the numbers, bottom line, you had a drawdown. What it did first is spiked the oil market higher, and then at 11:30 it gave it up again. And after 11:30 it started crawling, making its way back topside once again. We go take a look at Boeing, the Boeing Corporation. Boeing right now is trading at $130,478. And this little baby is having a tough time getting through the top of the consolidation, which is $136.78. Let's go to Dave in Boston. Hey, Dave, what's going on?
Hey, Tom, how are you?
I'm doing great, man. Yourself?
I'm good.
Cool.
But this I'm looking at BMY.
Okay.
Things gotten beaten down a little bit. I'm just looking for maybe a little bit of a pop on it, where we could maybe a bounce. And seeing what you think.
Let's take a look. So you got Bristol Myers. This company, the low for the year is $51. The high 77. This is a tough one, man.
Yeah.
So this baby, folks, literally got taken apart by, I think it's a partnership with another drug company that is not going to get approved in the UK. I wouldn't touch it right now.
No.
This
Okay.
now he went from 76 to 61, monster volume. You see how when you go over to October of 2014, the high of that is 59. You're already into that bar too, so that's saying that guess what? You get down to 53.
All right. Look at it about 53. You think?
53 to 51, yes.
All right, Tom. Thanks.
Cooking, brother. Have a great one,
Yeah,
man. Have a safe
you
one.
too.
Stay right there, folks. Coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up 16, Nasdaq's down 2, S&P's are up $1.50. If you go over to, Tesla is the is the mover in this whole driverless car business, folks. They're the first mover. But I'll tell you, this is pretty wild what's going on. Ford Motor. So the first time in America's industrial history, the Center for Automotive Technology is drifting away from good old Detroit. Ford is aiming to put a fully autonomous vehicle into the economy by 2021. This is pretty wild, man. I read part of the story this morning, folks. They're not only saying they're going to have driverless cars in 5 years, they're not even going to have a steering wheel on the car. It's on the front page of the Journal today. So check, well, I'll read the rest of this, but that was amazing. Ford announced that it aims on putting fully autonomous vehicles into the economy by 2021. Announced that it doubled the size of its office in Silicon Valley to 260 people, investing in 4 companies that are key to building self-driving cars. The car maker's move follows more than $1 billion in investments made by Detroit-based General Motors in a pair of California technology companies earlier this year. While the old school of mechanical engineering means in the Midwest, as does the factory work that hasn't moved to the southern states, these investments show Detroit automakers have realized that they must go to the nation's technology center in order to find software expertise needed to build the autos of the future. It's pretty wild, man. I just can't. I'm trying to figure out. I mean, is technology, I guess, is going to be that good that we're going to have cars driving down the road without a driver? You know, I can see this in industrial warehouses. Pretty easy. Driving down the expressway, I have a harder time envisioning that. There's no doubt about it. Yeah, it will be. You know, there's no doubt it's going to be a big plus for bars and for drinking and driving. There's no doubt about that. Driver assistance packages have already done that. And I guess in China, Tesla just went from saying that they're fully autonomous to a driver assistant package also. So we'll see where it shakes out. But hey, it's pretty wild. You know, not quite sure how they start up again. So what happens with these cars, even a driver's assistance cars, if you stop them right now, then if they stop all the way, they don't start themselves, but they can go from 100 to 200, it doesn't matter. You go from 100, you get down to 1 mile an hour, and the car itself will bring you right back up. And what the car will also do is keep you away from the front of the other car a certain amount of space. But Ford's saying that they think they're going to deliver one in 5 years. Yes, that is pretty intense. 877-927-6648. Let's go take a look at the small caps out here. So if we start with the IWM is down 50 cents. We're trading at 121.89. And the IWM is going to need a lot more volume on the way down to sustain lower price. We're at, well, you know, if I don't suspect that this will close under the, well, this could do it pretty easy, actually. $121.76. You close under that, bottom line is that, you're in the lower range. The Qs have already, and it was subtle yesterday, folks. What the Qs did yesterday was very subtle. They just closed under, they didn't have the volume, but they had the price. And the way the Qs are trading out here today, the Qs are up 9 cents right now, but if you close right here, you get a slightly lower low with a little bit of volume. The SPYs, when we started the show, were at 58 million. That's only 59 million. So that's if that stays at 59 million, that's, well, it's not going to stay at 59 million, but if it doesn't do about 70 million, that would be saying you could bounce pretty quickly too. That being said, 35 minutes into the close out here, this is what happens with Fed minute days, Fed announcement days. You have about 24 to 36 hours to really keep your eye on this market. So don't be surprised. You know, the market couldn't get higher price after they came out and said, okay, they didn't stay at status quo, but they couldn't make their mind up, that they're going to go up on rates. What they did say inside that statement is that they felt that the 2% inflation rate was a long way away and that had plenty of time to catch up. That would be the dovish thing they said. The hawkish statement came from the fact that they thought they were already at full employment. So if full employment's out there, bottom line is that what are they going to say next? It seems to me that when we just look at where the meetings are maybe December's the number. That they just go up a quarter. See, even if they go up a 0.25%, I don't see that doing anything to the market, basically. Well, it might do something to the market, but it's certainly not going to do anything. People aren't going to make changes in their lifestyle if, in fact, we go from a 1.5 to a 1.75 in the 10-year yield. Let's go to Carlos in California. Hey, Carlos, what's going on, brother?
How you doing, Tom? How are you?
I'm doing great. So, hey, Misty's your daughter?
Oh, yes. She's my youngest daughter.
Yes.
Yeah,
She's...
was in the Tigers Den the other day, and she asked a question.
Trading gasoline. I know. Oh, my God.
Yes. And thanks for tell her to get out, because it seems like gasoline wants to keep going higher.
Oh, was she short?
Oh, yeah, she was short.
Okay.
Yeah, she was short. But last night, we closed it.
Yeah.
And practically this morning seems like he went up, back up. So
ready to hit it again.
yeah, it's true. But I have a question, Tom. It's related to the futures.
Yes.
Oil futures.
Yeah.
This contract. I remember you said a moment ago that ICE was between 46.94 and 47.22. Is that the September contract, or is the new contract?
The October.
The October.
Now, this is a great question, folks, okay, because this is what does happen. So picture this. When, now, particularly with the oil, what happens here, folks, is this. The futures contracts, let's say we're talking the NASDAQ, the Dow, even gold, silver, they roll every 3 months. So even when I'm saying with numbers that rolled every 3 months, now if you're rolling contract to contract, what will end up happening, those will be different numbers, and it'll be the same characteristic, meaning coming up to ICE, because of the fact that they line up the same, but because they're in the future, they have different numbers. And that's what's going on here, Carlos, with the oil. So on this contract here, see, it's the same formation, right? But this formation is that and all this ICE is where you really get the second breakdown, the breakdown in general. And that breakdown happened July 7th. That's when oil went from 49.53 to 46.17, right? So what I do, Carlos, is this. I go up to the bottoms of, you see how before it broke? Here, just hang with us for a second, all right?
Oh, yeah.
Awesome.
Thank you.
This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow Industrials right now are up 18. The NASDAQ is flat. S&Ps are up 2. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We're talking with Carlos from California. We're talking about the oil market. Okay, Carlos, go ahead.
Yes, and the other thing I noticed, Tom, and this is something that I seen on the 15-minute chart that I really I focus a little bit on that before I put my trades.
Yes.
Right about the middle of the day, it's very common to see a very high spike of volume in either oil and gasoline.
Interesting.
And that doesn't mean that it's gonna go higher or lower. It's just I can see that, and when I look at the 15-minute charts, I go back.
Yeah.
There's always around in the middle of the day a huge bar of volume, and it just it's something I noticed. And I don't know if that means
cool.
something.
That's so what happens. What's intriguing about the oil market in general is that you have large operators, and this would be private operators of pipelines in the U.S. I happen to know one of them, and I know the person that owns it, which is a mind blower. And these operators, they know how much oil is in the system, and it doesn't mean whether they're going to be right, because I've talked to this guy about hedging both ways. Do you know what I mean?
Yeah.
But what does happen is that the pipeline operators themselves have a decent understanding of the flow going from the Gulf coming into the middle of America. That's the one. That's the guy I happen to know. Okay, so maybe that's when they're putting their hedges on. Do you know what I mean? They're not trading it, and I just don't know whether that's the case. They're definitely not trading. What they're trying to do is that they're trying to. They get a toll. They get a toll for the oil going through the pipeline. That's how a pipeline works, right? So they get the toll, and what they're trying to do is trying to figure out that what is the supply versus the demand, and if they're stacking up, let's put it this way: if there's too much supply, they're going to get less money for everything going through. That's what it comes down to. And what they try to do is they try to smooth out their earnings like that. So I'll keep an eye on that though in the middle of the day.
Yeah. Another thing, Tom. Yesterday I noticed when the market closed.
Yes.
Oil looked very stable until it closed. You were talking to Andy Hick.
Yeah.
And then you got the power, the lighting that messed up everything in the office.
Yes.
And at that time, seems like I saw a bar, a low bar on the price. And I thought there was a news or something. I don't know if there was a news right after the close.
I believe what it is this. So every Wednesday at 10:30, we get the oil service numbers. After the close last night, I think it's the API numbers. So numbers do come out every Tuesday. That's what you saw there. And there was a differential. The thing is, because even in the den this morning, if you see it at 10:30, you're going to see that a couple of traders said, wow, this is wild. That the numbers didn't add up
Yes.
for the numbers that come out last night versus today, and I suspect that happens quite a bit. Right.
Yeah, and I'm trying to understand all those little things so I can do a more savvy position on my trade. Right now, I'm waiting for this price to fail, just to give me a reason to short it.
That's
but I'm
right.
gonna wait until it gets either respected or violated. Either way.
Right. No, and wait for that. That's the bottom line. Now let me go back at something what you said, because this is where this gets really wild in the markets. Is that there's one thing understanding what's supposed to happen fundamentally with these, and it's good to understand what's supposed to happen, but remember that isn't what does happen all the time.
It's true.
No, it's crazy. I know.
Today was one of those days, Tom, because I was expecting after the report to have a huge spike, and we didn't have it.
Yeah. Now, but this is what I've found does happen. That's on the short term. On the longer term, when you can really make a theoretical case on something, most of the time you're going to be right. But what does happen on a longer term basis, you're talking about 3, 4, 5 months or something like that. Do you know what I mean? So keep that in mind, and that's where that if you are not going over your head in the markets, you can do pretty good. So because there's always that quote out there, the markets are smarter than you and you won't have any money left and all that. Those quotes are just they're real quotes, but the reality is that if you do have a longer term view and it's pretty solid, most of the time that everyone else is going to get tired in the market and you'll get your due. It's kind of how it works.
Well, Tom, another thing, I thank you for your opinion on this platinum position. I closed it today.
Oh, good.
I couldn't handle it after the report.
You know what was interesting, too? Platinum still held up, too. I know. It was interesting, man. Yeah.
I closed my short position, and I think I'm gonna switch the symbol so I don't see it for a while until I refresh my memory again and come back and see what I can do with it.
That's funny. That's perfect.
Thank you very much. Man.
Thanks, man. Have a great one. Have a safe one. Dow right now is up 27. NASDAQ is up 1. S&Ps are up 3. And we are going to have, let's see what we're going to shake out here. So NYSE still isn't going to have the juice. NASDAQ is, though. NASDAQ is going to come in at about 1.8 billion. And so what you are going to have there is that you're going to have, basically a low with some volume. And, what's intriguing here, so check this out. This is what's intriguing when you talk about candlestick charting, too, folks. So this would normally look like a hammer, but it's not a hammer. The reason it's not a hammer is that what happens is that a hammer and candlestick charting, folks, is after a downdraft. This is a hanging man. So you get all these little dojis at the top. You almost got a little island. Now you got a hanging man on top of it. This market wants to go south, and that signal there is really deviant, because bottom line is that you have to make sure that it's just like a bullish engulfing or a bearish engulfing. In this particular case, the market would have to already go down versus it's hammering out a bottom. And, of course, we're at highs. We're not at lows. This will be interesting. Cisco after the bell. Oh, this is going to be fun. CSCO. The reason that's going to be fun is that Cisco, oh, what a bummer, 1630. I wish it would be out right at quarter past. See, you know what's a bummer what I just said there, folks, is that at 1630, 4:30, the contracts on Nadex close at 4:15. It would have been nice if they come out at 4:15, because what Cisco's doing here, Cisco is off the highs with monster volume. It's almost like here. Let me just look. I gotta. Oh, I see. 1 second. Hold it. Oh, they're cutting. Oh, they're prepping everyone for something bad here. Cisco's going to cut 9,000 to 14,000 jobs worldwide. Was that yesterday's news? Yeah, it was yesterday's news, but Cisco's coming down on volume. Cisco's going to have a problem. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So let's go over to Cisco. So Cisco, that's a big number that they're laying off. There's no doubt. That is a large number. So if we take a look at it, now it's only down 38 cents. But the volume, man, they're just getting out of the gate. So let's see. Put this on a monthly. Well, first off, what you had done is that you broke topside last month, dramatically lighter volume. So we took out $30.31, had 630 million. You did 441. So you're going to break back inside. Now the question is, where do you break back inside to? 29, 24. $24. Well, we'll see where it shakes out. It looks to me like it's $24. That's $6 down. That'd be pretty intense if that's it. Where I'm going with the $24 is that the highs of 2008 are 22. As we came up here, when the market got toasted in January, the high of the low there is $26.26. That's kind of looks to me like it would be a natural retracement. That'd be 20% down, and I believe, yeah, that'd be pretty wild if that's the case, because a man, Mr. Dave White, was telling me in the den that they're cutting 20% of 67,000 jobs. That is a big number, man. We haven't seen something like that in a long time. Let me just see this. Yeah, the last update, they had 73,000 employees. Their mix of business is just about all in America. It's interesting. South America and North America. Out of the revenue, $29 billion is from the Americans. Emerging markets is 12 and Asia is 7. So that's a big number. You know, that is one large number. We got to take a look at the SPY, see where we are with the SPY, with the volumes on the SPY out here. SPY right now, you're done 64 million. So you get a lower low here. You know, not big, but that's a small expansion in volume. The NDX 100, what you have, that's at 14 million. That end up doing about 16 million. And the small caps, you're at, small caps need more volume on the way down. Gold contract, what we have with gold, sideways move out here in gold really didn't do much. 162,000 contracts. Silver, we take a look at silver. Oh, this is big. Glad I pulled this up. Okay, so silver. Okay, silver's giving the information. What a trip this is. Okay, so check it out. So silver did 76,000 contracts. You're going into 62,000 as well as 49,000. Yep. So silver is going to lead the charge on the way down, which would make sense. Inside the metals, because it held price, but what silver did do is commit to the both lowest swing points with an expansion of volume. That's saying you're going to at least go down and test that, and I expect what you'll see. Oh, I see that. That was when the that's wild, man. That's when the Fed minutes come out. They love spiking things all over the place when that happens. But bottom line, guess what? You have a high volume spike, you're going to go down and at least test it. And what silver is saying is that that test is going to come on, and more than likely we'll see it tomorrow. You stay right there, folks. We'll be coming back with some numbers in the next hour, particularly Cisco. That's going to be a big number. Dow Industrials closed, well, they're up right now, 14. NASDAQ is flat. S&Ps are up 2. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Seam in Dallas.
Hi, Tom. I love your show.
Thank you so much.
I've been listening to you since 2001, from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah, I love all the hosts. I love your show. I'm addicted to it.
That's Hotel California. It's wicked, isn't it, man?
Thanks. All right, Tom. Nice to talk to you.
Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, you have the right to ask them for what you want, and they have the right to say yes or no. Market-wise, let's take a look at it out here. We had the Dow Industrials up 21, NASDAQ up 1, S&P's up 3, gold contract down $4, traded at $1,352 an ounce. Silver down 17 cents at $19.70 an ounce. Platinum, $1,116 an ounce. Copper down a penny at $2.16 a pound. Light sweet crude up 30 cents, trading at $46.88 a barrel. Bonds, you have the 10-year note up 7 ticks, $132.07. 30-year bond up 25, 171.28. King dollar down 19 ticks, 94.74. The euro is trading at $1.12, and the yen is trading at 100. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? The SPY gets down to 217.02 at a small expansion of volume. Doesn't want to hold lower price. Bottom line, it looks like 218.88 will probably get tested again tomorrow. This is, let's see, that's how that sets up. The low of the high can get tested. Now that's in the S&Ps. The NDX 100, 3Qs closed at 117.26, and I believe that's still under. So the Q's a different animal. What you have with the Q's go down, have higher volume, that's saying the Q's want to be right back downtown again. What you do look at the indices, what you have is that we did 789 million on the NYSE versus 749, which is not a big deal, by the way. NASDAQ Composite, different ball game. The Composite, once again, upped the volume as it got to lower price. You did 1.7 billion versus 1.6. The Composite itself, intraday, did get down to 5,197. That says you're going to be right back down into those lower levels. Gold contract. What do we have with gold? Gold contract had a sideways move out here today. We traded from 1356 to 1340. Doesn't say much. That's the real bottom line. My take is that the gold market wants to make its way down. It's this 1285 level. We'll see how that shakes out. But you had the Fed minutes come out today at 2 o'clock, and the bottom line is that the governors themselves were split on how fast they have to go up on the rates. Bottom line, they're in no hurry. When you cut to the chase, Dudley is out here saying that, he thinks it can go up in September. Well, inside the minutes, that wasn't the conversation. The conversation inside the minutes out here, folks, were that 2% inflation, which is what they're targeting, is a long way away. And they felt that they could wait for more information to come into the marketplace before they go up. That would be the dovish part of it. The hawkish part of it was that they felt they were just about at full employment. That says something different. Now, that being said, at full employment, if we go over to Cisco just came out with the numbers. Cisco closed at $30.72. That right now is trading at $30.28. Bottom line, Cisco came out last night saying that they were cutting up to 5,500 jobs. That's a big number. That is one big number, no doubt about it. Notes. Let's go to the note market. We take a look at the notes. The notes, the 10-year note and the 30-year bond, they both looked that they are building cause to get into this B point of a potential ABC structure on the way down. So this is going to be pretty wild waking up tomorrow, watching, particularly watching the market about 6:30 tomorrow morning, Eastern Standard Time. The reason being is this. We haven't seen an ABC structure down in the bonds or the notes in quite some time. It's pushing into this lower swing point from the 21st of July, and you're pushing in there with volume. It hasn't hit it yet. And this is where it's always dangerous when you actually haven't hit it. So, like if we had hit it today, folks, it would have been much better. The reason being is that what happened yesterday is that we got to a price point of 131.28. You did 1.4 million contracts. Today you did 1 million contracts. You got slightly lower, 131.26, but what it's trying to hit is the 131.19. And if you don't hit it and you still have volume, which we have, that's when you, probability-wise, you're building cause to go after that number. And if, in fact, we break that number, and if we break it with volume, that's going to be it's a good-sized ABC structure on the way down. And what that would be saying is that the market itself is deciding to put the rates up a quarter point. So that's kind of where the markets are standing right now inside the currency markets, which is crucial to get your head wrapped around. If we go over to the dollar, we take a look at the dollar. What we have with the dollar is this. The dollar right now, the dollar looks to be building cause to get into higher price once again. You know, dollar yesterday came down fast and furious. We went from a price point yesterday inside the dollar index from 95.61 to 94.38. We did 29,000 contracts. Now, the dollar was certainly going into Brexit, which was June 24th. Well, that had 66,000. It's not going to break that down. Today, if it had got to the low, it would have been better off, because then it would have been a rejection of the low. You know, so right now, you know, my take is that, yeah, we're building cause for higher price, but in order for that to get a higher probability, it would have to go back inside 95.33. So it's about 500 ticks away from where we are right now. Then you probably would go much higher that is, in fact, where it wants to go. If we do go overseas and we look at overseas, what you're going to see, the DAX came down hard today. We came down 138 points, and we, bummer, I don't have the volume yet. Bottom line, we'll see whether we get the volume going. Inside our metal markets, what we did have volume on the way down inside the metal markets. The XAU came down $1.59. HUI came down $3.73. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming back with some more numbers for you. Dow Industrials finished up 21. NASDAQ was up 1.5. S&P was up 3. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go over to Cisco and see what they're having to say here. So, let's see. Okay, they're going to plan to cut 5,500 jobs. They had, this is interesting. So the estimate was 60 cents. They're saying they did 63 cents. The news is not that bad compared to what the volume was out here today and what it actually did. They're going to take a charge from $325 million to $400 million in 2017. That's going to be on cutting their workforce. Their gross margin has come down to 63% to 64%. The thing is pretty wild when you actually look at this too, is that John Chambers was the CEO forever, and now there's a new CEO. So let's go take a look at Agilent, I think. So Agilent Technologies, that closed at $48.43. That's trading at $45.77. See what they have to say. So the earnings per share, the estimate, let's see, estimate, here we go. So the estimate was $4.18 billion revenue-wise. No, that's for the year. They see the revenue for the year. One second, let me get you the number here. So they're topping, on the third quarter, they topped their estimate. The estimate was, it's wild. Some of these companies, what they do is that when they put the press releases out, if they really don't want you to have this quarter's, they push next quarter's out at the same time. So they made 49 cents this quarter. Next quarter, well, first off, then they give yearly guidance. The estimate for yearly guidance was $4.18 billion. Now they plan on doing 4.14 to 4.16, so that's less. For the yearly earnings per share, they're saying that they're going to do $1.89 to $1.91. Okay, so I see the third quarter. So the third quarter, they're actually saying that they made 2 cents more. So right now, the stock is trading off $2.50. Oh, look at this, going right after, unreal. So this equity, $48. Well, guess what? When we came down in Brexit, it has a high volume swing low at 41. Man, it's going after it. Unreal. Pretty wild. KEYS. Let's take a look at what this is. So this is Keysight Technology. They offer electronic measurement services. That closed at $29.68. This is trading at $28.50. This estimate was 60 cents. They made 63. So they made their numbers. The revenue estimate was $718 million. They said made $715. $28.50. And you'll see this thing is going back to where it broke out from. So right now, they closed at $29.68. Your lower swing is $28.18, but more than likely what you're going to see is that there's a gap from the last time they come out with their numbers. The bottom of that gap is $25.91. More than likely, that's what we'll get. SN, let's see, PS. This is Synopsys. They design automation solutions for the global electronic marketplace. The low for the year is 39. The high is 56. This is trading up $1, and it's at highs. So this is a little rocket ship. Numbers go like this. Revenue is $615 million. Earnings per share, the estimate was 74 cents. They made 76. Revenue estimate was $602 million. They came in with $615 million. So they basically did good all around. They're giving guidance. That was for the third quarter. The guidance for the fourth quarter, they are saying that earnings per share is going to be from 75 to 78. And they see revenue coming in from $621 million to $636 million. And the estimate was $608 million. So bottom line is that you do have the equity trading up $1. Let's take a look. Yeah, you get all-time highs here. This is quite a run. The stock in 2007 was $17. And now you're up there at $56. Big deal. Let's go take a look at this one. YY. This is an ADR. This is a social platform. Closed at $49.08. That's trading at 51. I think it's a Russian chat room. Don't touch this one. This one's a mess. So this one came down hard from 56 to 48. I think it's going to be right at ice, actually. Yeah, this stock has got killed. This equity's down from $96. $96 straight down to 31. Yeah, thanks. Yeah, Chinese stock, not a Russian stock. Yeah, Chinese stock. Let's see. Social platform, real-time online group activities through voice, text, and video. Yeah, I guess, yesterday, last night, Google come out with, a chat service also. They're all going to have chat services. It's pretty wild watching this whole thing shake out, how it is shaking out. Our phone number is 877-927-6648. Some of the higher volume stocks out here today. Cisco was the big one. The Cisco had volume all the way down today. Sirius Satellite was up 4. You had Staples down 66 cents. Ford Motor was up 5. Ford is going to go autonomous. They're claiming that they're going to have a car without a steering wheel within 5 years. Twitter is down 23 cents. You had the Southern companies up 51. Marathon Oil is up 51. Target and Lowe's, they both got hit pretty good. When you do take a look at Target and Lowe's, they're going to go lower too. Target gap down today, closed yesterday at $76 and $75.48, and closed out here today at $70.63. And this is the kicker with Target. You get that high volume swing low. That is out there from the May 18th. That number there, folks, is 65.50. So that's going to be a little magnet that somehow, some way, it's going to bring it all the way down into that level. We go take a look at tomorrow before the open. Walmart's going to be the number, folks. That's where we stand out here. Walmart closed at $72.93. They are coming out with their numbers at 7 o'clock tomorrow morning. Our phone number is 877-927-6648. Stay right there, folks. We're coming right back. Dow finished up 21. NASDAQ was up 1. S&Ps are up 3. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over to the oil market. We take a look at the let's actually take a look at the XLE first. So the XLE, folks, has been trying to bust over these highs for quite some time. It was up 21 cents today. You're at $69.57. The highs that we're talking about are $69.73. This has been laying here since let's see, April 26th. You know, what we did have today is that you had a slight expansion of volume. You did 14 million shares. Now the 14 million is coming into 15 and 16, I think, and 18. You know, so it looks to me like more than likely it's going to test 69.82. We hit 69.61. I suspect you'll get that test tomorrow. Inside the XLE now, what you have, ExxonMobil, that is the largest weighting. That doesn't have any juice underneath it. ExxonMobil has already just gone from $95. It's traded at 88. That didn't have an expansion of volume. CVX, Chevron, same setup. So, you know, just those two right there, if you want to see something that's really bizarre. We'll go through a few more of these. But it's interesting because Exxon and Chevron make up 32% of the XLE. We'll do Schlumberger next, SLB, because that's going to bring in another 9. And, you know, Schlumberger, not bad. It's at its highs, but nothing heavy. So that's going to have a tough time getting over those highs just because those two, never mind going through the rest of them, bottom line, don't look like they're going anywhere. The XLF, the banking sector, what you have with the banking sector, this is just snuck its nose over the high of the consolidation it's been in today, but yet dramatically lighter volume. We pull this back. Yeah, there's still nothing here. Pretty amazing. The XLF right now are at 2404, and you're 20. Well, actually, 23.73. We're right at ice. Dramatically lighter volume, too. If we take a look at Morgan Stanley. Let's see. JP Morgan first. JPM. That's hanging at the highs. Morgan Stanley actually went higher. Let's take a look at this. Okay, so Morgan Stanley, I see we're at $30.37. Yeah, this can get to $31.70. Bank of America, BAC, that's at highs. BRK, now this is the Berkshire Hathaway is the largest weighting structure inside the XLK. No, the XLF rather, sorry. XLK is technology. Okay, so Berkshire, this is a breakout in Berkshire today. Did it get over that number? Yeah, it did. So, you know, Berkshire, let me pull this back a little. Berkshire's up $1.84. $149, yeah. So, hey, Berkshire can go after its highs. Now, it broke over this high, let's see, 14,000,007. And it's going to have lighter volume, but guess what? As long as it holds over 148.03, that can get up to that $152 area. And I suspect that's what put some juice inside that XLF out here today. We go to the XLK. The XLK, folks, you know, is the Technology Select Fund. Now, inside this, Intel's the big one in this, I believe. Let me just see this for a second. No, it's actually, I see, this is pretty cool. So Apple's 13%, Microsoft's 10%, Facebook is 6%. We take a look at this one. This has been on fire. This has been a one-way trip, and that's up. Yeah, all around. You know, this one here can take a big hit, though. What was intriguing today, which I expect, you know, we'll see where this shakes out the next couple of days, is Apple. So Apple didn't give it up on price. At one point during the day, it was down like $1, $1.50. Only was down 16 cents. Did 25 million shares. Can't get higher. But the thing that was so intriguing about it is that Target is blaming almost Apple for for missing their numbers out here today. Target actually had lower comps than the stores, so it wasn't Apple's fault. Bottom line is that they were putting press releases out all day long, though, that Apple devices sales at Target fell 20%. That's pretty intense. The real key, of course, is that, well, how much do they sell in correlation to whether it's an Apple store or on the internet? You know, bottom line, is the internet companies picking that all up? And is that a big number? You know, we'll see. But press-wise, they were pushing it. They were pushing it in a big way out here. If we go over to the UK, we take a look at the UK. What you have with the UK is this. The UK today was down $34, 68.59, and this had volume behind the move lower. DAX in Germany also had volume on the way down today. Now the DAX really gave it up pretty good. The DAX was down $138. It hasn't got back inside its lower range yet, but you're right at it. DAX is trading at 10,537. You get back inside 10,474, that'll be a failure. And it traded just about the same way, too, which is pretty wild. Meaning we went up 81 million. When it broke topside, which was last week, you broke out of a consolidation, and you did it with 81 million shares. Well, we just broke downtown with 68 million, and we'll see tomorrow if it can get back inside the lower range. It hasn't done that yet. That's where the range sets up at the about another $75 down. That would get you back inside the lower range, inside the DAX, which in itself would be problematic. You got to remember that Monday, Friday in the summer, you're not going to get a huge amount of volume. we got volume today, and we're going to have a shot to get it tomorrow. And I suspect as the market is still digesting what the Fed is at least saying, that, because when you actually read the statement, you read the statement and say, okay, they're not going to go up. But then if you read the statement again, it's like, well, half of them want to go up, half of them don't. So when I look at that, that means that at some point, more than likely we'll get another quarter-point rise. And, when they started the year, they said they wanted to go twice. Well, they went once, and so if they feel that they're just yapping and saying nothing, which in fact they are, that they might just have a shot to go up maybe in December and say, no, we told you you're going to go up. Now you're not paying attention to us. We'll see. It's going to be wild watching it shake out, but the longer that I think these governors come out and say, yeah, we think we can come up, and then they finally do go up, the less of a hit that the market will try to get. And the ironic part here is that the Fed wasn't there just to keep the market at highs. But bottom line, that seems like part of their job right now. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 21. NASDAQ was up $1.50. S&Ps were up 3. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over and take a look at Rheingold Resources. So you had a few of these gold equities, folks, look like they've done an additional ABC structure on the way down. And Rheingold, bottom line, one of the best gold equities there are. It has been for 10 years now. So Rheingold had a high of $126. That was generated on the 6th of July. We came down pretty good. And what you had out here today is, bottom line, is that you broke this B point of 108.54. You went to 108.35, and we broke it with volume. Now, what happened is that you closed at 109.33, so you can make the case that it's going to be like a complex ABC down. What happens is this, is that if you break it and don't stay underneath it, you can go right to the C point again, which in this case is 113.25. The reason I'm bringing it up is this, is that the XAU and the HUI and the metals itself have not broken. They're not even close. This is an indication, this ABC here has a price projection that lays out at 100. That would set up with, let me put this back on a weekly, what that sets up with, you got to remember, this stock went from $54 nonstop up to 126. That would set up with, number one, where it broke out from. And that's what it looks to me like these babies want to do. So if we go over to Royal Gold, we take a look at Royal. Royal still held up well. It's right at its highs. You're at $83. The high is 87. Barrick, which we know that Soros sold 13 million shares in Barrick. Barrick's a problem. What Barrick has done is this. You're down 45 cents. Volume came out of it today. Barrick is trading where it was trading June 13th. Newmont. Newmont's down slightly, but it rejected lower price today. If we take a look at Anico Eagle, that came down with volume. So Anico Eagle, bottom line, looks like it wants lower price. Anglo Ashanti, Anglo Gold rather, this is off its high of 22 or 19 right now, and that's making its way down with volume. What I expect you're going to see, the reason I'm bringing this up is that it looks to me that the broad market, the metals market, they all want to trade together. They're trading together, and none of them want to break yet. But it looks to, well, what we did have is that a couple of the gold equities did an ABC down. So we'll see whether that's going to be any indication that that's what where the market wants to go. Because what we do have, when you go over, that the correlation between the dollar and gold is really well. It's placed well. And what we did have out here today is that in the aspect that I'd say the consensus is the Fed's not going to go up on rates. So that shouldn't bring the dollar to the moon. It also shouldn't bring commodities to hell. Well, guess what? None of them could catch a bid. If we go look at the rest of the commodity market, this is what you had. Lean hogs are up 1.9%, but they were down 4% yesterday. Gasoline was up 1.9. Soybeans are up 0.8. Then when you start getting into the down ones, you had sugar down 2.6%. Coffee was down 1.8. Silver was off 0.9. Cattle was out 0.8. Natural gas was flat. If we go over to the natural gas, let's go over to the natural gas market, because natural gas numbers tomorrow morning, 10:30, will be coming out. Natural gas is trading at $2.65 a BTU. And real question is, where the heck does natural gas want to go? $2.63. Oh, well, you're $2.65 right now. This is right in the middle of a range, which is always tough to do. So the top of the range is $3. The bottom of the range is $2.30. Yeah, I mean, bottom line, I don't know. Natural gas can just crack either way in a heartbeat. Because the way it actually finished out here today, it looks to me like it's going to go down versus up. So what you had is this: is that you came down last week with 110,000 contracts. You reached a low of 260. You got to a lower low with 79,000 contracts. But watch, we went up Monday with 58, Tuesday with 62, and today with 64. So 64 is actually going against 110,000. So 10:30 tomorrow morning, it looks to me like natural gas is, want to basically pull back. And what we do have is that this is a time of year that we have a huge natural gas. Our natural gas, in fact, this contract is right in the Gulf of Mexico, I believe. Let me see. Let me pull this up. Yeah, I think it's the Henry Hub. So the Henry Hub's in Louisiana, I think. Okay, it doesn't say it here, but I believe that that's where this contract originates out of, the Henry Hub in Louisiana. And what does happen, of course, well, you saw the floods in Louisiana. That's terrible. But what does happen is that when we're coming up to September and October, that is when you can get a couple scares for hurricanes coming in the Gulf of Mexico. Now, we've been so lucky, folks. It's amazing. I mean, I think we're going on a good 7 to 8, 9 years without anything major coming in to the Gulf of Mexico. Let's keep it that way, big time. 877-927-6648. We go over and we take a look at 3M. Oh, great! One of the tigers are telling me a storm is just forming. Well, let it stay down in the Caribbean. No, I don't want the Caribbean. We don't want it. Period. Anyway, we look at 3M. 3M was up $1.73 today. This baby's at highs, so we'll see. And now this is at highs with like zero volume. It's pretty amazing, actually. Johnson & Johnson. Now, Johnson & Johnson had come off its high with volume. This for an equity that was going up forever, now you're going to see a contraction on this. This looks like it wants to go after $115. You're down from this 126 area. Not the end of the world, but that's what it looks like it wants to do. Big Blue. What do we have with Big Blue? Big Blue is just trading sideways. You're at 160. Yeah, Big Blue wants to go downtown too. It's pretty amazing when you look at Big Blue. That's trading back where it was in January of 2011. Took its while coming down there, but Big Blue still looks to me like it wants to go to 116. Well, actually, 116, that's where it held the first time, yeah. So where Big Blue held the first time going down from the $215 area was it held at $116. Now, $116, folks, was the high of the low of 2008. That's where that was shaken out. So that's pretty intense because in that context, it's going to be actually hard to break that down. We'll have to build some cause. And that's one of the first ones that we actually seen come all the way down into those lower levels. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 21. NASDAQ up 1.5. S&P's up 4. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. Okay, so when we take a look at these indices, this is what you had out here. On the NYSE, you did not have an expansion of volume. Bottom line is that what we did out here, you did 876 million, 789 million rather. So that was an expansion of volume from yesterday and in general, but when I say expansion of volume, you need a big one. That's only 50 million more. NASDAQ Composite, how it did, folks. NASDAQ Composite came in with 1.7 billion. So bottom line is that the composite itself looks to me like that's going to be the main culprit trying to bring this market a little bit lower. Now, the market itself, you know, guess what? Only really has tomorrow to get volume, a follow-up on the way down. That's how this is shaking out right here. In fact, let me look at this calendar for a second. So if we look at the calendar, yeah, no, it has all next week, too, to do it. Okay, so Tuesday, Wednesday, Thursday in the summer, Monday, Friday, short days, because what you're going to have next week, because if that doesn't happen, well, guess what? You'll go right into Labor Day. I wouldn't say that this market's going to fall apart in Labor Day. When you take a look at the S&Ps, we have been up here now since July 14th, the same price. July 14th, we were at $216.67, and we were at $217 today. You know, so that's a long period of time being at the same place with very small price spread. That's always dangerous. The reason it's dangerous is this. It's not dangerous going to higher highs and you get volatility and you come down, you know, 2 or 3%, you go up 2 or 3%. It's the price moves that you're not going anywhere and you have light volume, because that is the sign of distribution. That's what distribution is all about. Distribution is laid out at highs with light volume, and you try to keep it up there as long as you can keep it up there. The NASDAQ Composite, bottom line is that has been inching higher each and every day. Now today, you know, it got down to the $116.43, but guess what? It closed at its highs. You know, what you did get out of that, though, is that when it got into those lows out here, what we're going to have NQU in the Qs as well as in the futures market, what you do have is that when we hit these lows out here this afternoon, At 47.82, well, you get some high volume swing lows. You certainly don't. And on the way back up, you were just coming into the downdraft that had been created out there at 9:30 yesterday morning. So bottom line is that what I expect you're going to see overnight is that you're going to see a little selling pressure coming in. Metals just can't seem to catch a bid. I don't expect any disaster there, but can't catch a bid. The yen. Now, the yen would be the wild card. Yeah, but the way the yen under $1 psychologically is a real problem. The yen's trading at 100.25. That has to get back inside 100.68 in order to get the traction it needs in order to go topside. If we do go look at the Nikkei, which the yen is all about, the Nikkei is all about, the chicken and the egg, with the yen just holding last night, the Nikkei went up $149, but that was no juice. The Nikkei looks like it wants to stay in this consolidation and stay in this consolidation for a long period of time. Don't forget, folks, if you are listening in the car phone right now, that we do live programming every Monday, Wednesday, Friday, from 8 o'clock in the morning to 5 in the afternoon, Tuesday, Thursday, from 7 o'clock in the morning to 6 in the afternoon. You can get all that programming right on your cell phone. Go to TFNN.com. On the browser, hit Target TV right on the right-hand side. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right back here tomorrow morning, 8 o'clock. Go get them, folks.